Finance bros writing off their entire income tax. Let's talk about a subject today that I've been aware of and utilizing more than half of my career. It's called a cost segregation study, but recently I'm hearing this from every finance bro on every social media channel, as if it's something new. Let's take a look at one video I caught recently.
Here's how you can avoid 100% of your income taxes every single year. We call this strategy the paper loss strategy. In order to use it every single year, you have to understand the rules.
You can use this deduction one time for one property. You can't do it every year on some kind of recurring basis. You would have to be buying properties all the time, every year.
The very first thing that I'm going to need you to understand is you're going to need to buy an investment property. When you buy a rental property, it could be an Airbnb or it can be a long-term rental.
Not everyone wants to be a landlord. Not everybody can stomach that. So this deduction may make sense if you're already an investor and a landlord. Keep in mind, doing it right necessitates a feasibility study. And what you want for that would be things like an appraisal, your inspection report, and your closing documents. In my professional opinion, a cost segregation study makes sense for a very expensive property or for a commercial property, which are usually more expensive. And let me tell you why. First, let's watch some more.
But as soon as you purchase the property, I want you to write off everything that's on the inside of the property. This could be appliances, bathrooms, tubs, cabinets. And when you write off everything that's inside of the property, it creates a big expense. We call this the cost segregation study.
Here's the thing you need to know. A cost segregation study is not creating new deductions out of thin air. What it's doing is pulling forward deductions you would otherwise be entitled to. You see, commercial properties are deducted over 39 years and residential properties are deducted over a shorter time frame, 27 years. In the cost segregation study, we're speeding up deductions. We're taking things that might otherwise have been deducted over 39 years and we're compressing it down to here's a big chunk of deductions now. It does make sense for some properties, but not for all. And keep in mind, here's another thing. Cost segregation studies are not free. A good budget is going to be in the realm of $10,000 per property. It's not something that happens overnight. It's going to take 2 to 3 months to implement.
Once you do the cost segregation study, it creates a big enough loss to offset your W-2, your 1099, your stock, and your crypto income, making you tax-free.
And here's one thing they just never tell you about. A cost segregation study can blow back on you in a couple different circumstances. Just one, for example, would be when you sell the property, you're going to have to give those deductions back. So if you're the kind of person that is constantly buying and selling properties, I just don't know if this is for you.